Everyone loves a record breaker. When the S&P 500 hits 6,000, the news anchors pop the champagne. Your retirement account looks great on paper. The vibe is immaculate. But what if I told you that the number 6,000 isn't a milestone? What if I told you it's a lid? Welcome back to Sandhu Financials. Today, we are not talking about the shiny surface of the stock market. We are going into the plumbing. We are going to look at the trapdoor that is opening right beneath your feet. We have a market that looks healthy on the outside, but is rotting on the inside. We have systematic algorithms ready to sell billions of dollars in seconds. We have a sneaky rotation where the smart money is fleeing the popular stocks you own and hiding in boring sectors you ignore. And we have the SaaSpocalypse, an AI wave that is about to wipe out an entire generation of software companies. If you want to know why your portfolio might be in danger, even when the market is up, you need to watch this video until the very last minute. I'm Shawaz Ahmad. Let's look under the hood. Let's start with the number everyone is obsessed with, 6,000. In technical analysis, we call this a psychological barrier. Humans love round numbers. When an index gets close to a big, round number like 6,000, investors get nervous. They set automatic orders to sell and lock in profits right at that line. This creates a lid. Every time the price bubbles up to 6,000, a wave of selling hits it, forcing it back down. When this happens 2 or 3 times, we call it a double top or triple top. It's a sign of exhaustion. The market is trying to jump over a fence, but it's too tired. But the real danger isn't the ceiling, it's the floor. We need to talk about moving averages. A moving average just smooths out the daily noise to show you the trend. Right now, we are seeing a bearish crossover. This is often called a death cross. It happens when the short-term trend, like the 1-month average, crosses below the medium-term trend, the 2-month average.
Think of it like a car. If your speed today is slower than your average speed for the last month, you are slowing down. The momentum is dying. Now, is this a prophecy? No. It's a lagging indicator. It doesn't predict the future. It confirms the damage is already done. Here is where it gets scary. The systematic support. Modern markets aren't run by humans. They are run by algorithms. These computers use trend-following rules. If the price drops below a certain level, say, the 200-day moving average, these computers don't think. They don't feel. They just sell. This creates a waterfall effect. Price drops. Algorithms sell. Price drops more. More algorithms sell. This is the trapdoor. 1 minute you are standing on solid ground, the next, the floor falls out because the machines all decided to leave at the same time.
While the index looks flat, there is a massive war happening below the surface. We call this sector rotation. Money rarely leaves the stock market entirely. It just moves rooms. Right now, money is leaving the growth bucket. These are your favorite tech and AI stocks. Why? Because they are expensive and they need low interest rates to justify their price. Where is the money going? Into the value bucket, energy, utilities, consumer staples, the companies that sell toothpaste and electricity. This is sneaky because if you only look at the S&P 500 index, it looks like nothing is happening. But if you look at your tech portfolio, you are bleeding. But here is the trap. We call this the crowded trade or the lifeboat theory. When everyone gets scared, they all run to the same safe stocks. Everyone buys utilities. Everyone buys Coke and Pepsi. What happens? Those boring stocks become expensive. A trade becomes dangerous when there are no new buyers left. If everyone is already in the lifeboat, the only thing left for them to do is jump out and sell. In 2026, defensive stocks have become risky, not because the companies are bad, but because the price is too high. You are paying a premium for safety, and that makes it unsafe. Now, let's talk about the buzzword of the century, AI. For the last decade, the best way to get rich was to buy SaaS companies, software as a service. Salesforce, Adobe, HubSpot. But in 2026, we are facing the SaaSpocalypse. AI is acting as a filter. A lot of software companies don't actually do anything special. They are just fancy spreadsheets. They exist to help humans organize data. Well, guess what? AI agents can organize data better than humans. We don't need a $500 a month software subscription for that anymore. These companies are legacy laggards. Their valuations are collapsing because investors realize their product is obsolete. This leads to the first rung problem. Historically, junior employees did the grunt work: research, basic coding, drafting emails. That was the first rung of the career ladder. Today, an AI agent can do that work for $20 a month. This is great for productivity. Companies can do more with less. But it is terrible for labor demand. If one person using AI can do the work of 5 people, you don't need to hire the other 4. The market is trying to price this in. What happens to the economy when the wealthy white-collar consumer loses their job security? This is why software stocks are being derated. Investors are paying less for every dollar of profit because they are scared the future profit won't exist. Let's zoom out to the real economy. Housing. The biggest mistake people make is treating housing like a national index. There is no US housing market. There is a market in Lahore, a market in New York, and a market in London. It is granular. One city might be frozen, while another has bidding wars. But the metric that matters for the Fed is shelter inflation. Shelter makes up 40% of the inflation basket, or CPI. But here's the trick. The government data is lagging. They use owner's equivalent rent, basically asking people, what do you think your house would rent for? This data is 6 to 12 months behind reality. The private market data, what people are actually paying today, shows rents are cooling down. The Fed knows this. They are waiting for the official data to catch up. Once it does, they have the green light to cut rates. But will they be too late? This brings us back to the dollar. Most of the world's debt is priced in dollars. When the dollar gets strong, it acts like a vacuum. It sucks liquidity out of emerging markets. It makes gold and silver more expensive for people in India or China. If you see news about countries moving back to dollar settlements, that creates demand for dollars. A strong dollar is a headwind for assets. We need the dollar to weaken for the everything rally to begin. The final trap is energy. The narrative is simple. AI needs massive amounts of electricity. Data centers run 24/7. Therefore, utility stocks must go up. The market loves a simple story. But here's the contradiction. Just because a data center needs power doesn't mean the local power company doubles its profit overnight. Building power lines takes years. Regulations are strict. Fuel costs are high. We have a mismatch between the narrative that AI is huge and the cash flow that utilities are slow. When too many people buy the story without checking the math, you get a bubble. Be very careful with the AI infrastructure trade in 2026. It is getting crowded. So, how do you survive the trapdoor? You have to choose between nihilism and discipline. Financial nihilism is the feeling that nothing matters, so you might as well gamble on meme coins or zero-day options. That is the path to ruin. The adult approach is gardening. You treat your portfolio like a garden. You trim the weeds. You prune the plants that have grown too big, which we call rebalancing. You water the ones that are struggling but healthy. You sell what is high and you buy what is low, automatically. It's boring. But boring is what keeps you standing when the floor falls out. 2026 will punish the gamblers and reward the gardeners. I'm Shawez Ahmad, and this is Sandhu Financials. If you want to survive the volatility, make sure you are subscribed. We track the signals the news won't tell you. Hit the like button, and I'll see you in the next update.